Good morning, everybody. Welcome to our first live trading session. Today is November 28th. Hopefully, y'all are having a pretty good Monday morning. So far, the Robinhood account's doing pretty well. I ended up buying some UVixy calls and shares on Friday that are currently up right now, and then some iron condors for TLT, which seem to be doing well and kind of pulling back, it seems like. But anyway, so I want to start off today by going over the economic news that's come out over the weekend. So there's a lot of news about China and their lockdowns and a lot of protests going on around there. So a lot of kind of backlash against their zero COVID policy, which is a bit concerning. Obviously, zero COVID means that they're going to be locked down, which means that our supply chains are kind of going to take a hit. So that's likely going to lead inflation higher than it has been. And last month, it came in at 7.7 versus 8% expected. So we'll see how the next print comes in. And I think that's probably around the 10th. We do have core PCE coming out this week. So if we look at the economic calendar over on investing.com, super useful tool that y'all should check out. But let's see. For today, don't have a lot going on besides Fed Bullard and Fed Williams speaking at noon. Fed Bullard is the second most hawkish member. You can find that on the Fed cheat sheet right here. And I'm going to link this in the chat for everybody to see. That way y'all have all of this sort of information. Hopefully this is useful for y'all. Oh, well, that's not what I meant to do. I'm trying to copy and paste this link. Okay. So y'all can use that link. So this will tell you which members are most hawkish, which are most dovish. So Bullard, again, is second most hawkish. And then Williams is the, let's see, I think seventh most hawkish, if I remember right. Yeah, so slightly hawkish, not super. But, yeah, we have two Fed members. That's pretty much it for today. So not going to see a lot of volatility today, but we are going to see a decent amount of volatility in the middle of the week with all the new economic data that's dropping. So we have Fed Bullard speaking at 12 p.m. No, sorry, that's today. For Tuesday, tomorrow, we have housing price index. I don't feel like that has much weight to the market right now, at least. It might have some weight later on when housing prices start to come down. But you have consumer confidence, which is a 3-star event, according to investing.com. And I don't always trust their star rating system because they rate the Michigan inflation expectations at 1 star, which is kind of weird because that's kind of the main concern of the Fed right now. So don't always go by the stars that they give you. Then you have ADP non-farm employment change. I think that's a new measure of unemployment or employment. Rated at 3 stars. You have GDP, probably the biggest event for this week at 8:30 in the morning on Wednesday. Then you have wholesale inventories on Wednesday at 8:30. JOLTS jobs reports. That's actually the new one there. JOLTS job openings. So the amount of jobs open, and you compare that to the number of unemployed people, and there's been a really big gap between those to where there's a lot more job openings, meaning that people can, kind of job hop and come up with higher wages accordingly. But yeah, that's all the big data Wednesday. You have Powell speaking on Wednesday at 1:30. Then you have Thursday is a bunch of big data. You have core PCE, which again is another inflation measure, and that's the one that the Fed really likes. So people are going to pay some big attention to what's going on Thursday. You have initial jobless claims at 8:30, so a lot of data dropping at 8:30. Personal income and spending, not so much weight to that. You have Fed Bowman. So we go back to the Fed cheat sheet. Bowman is the, let's see, 1, 2, 3, 4, 5, 6, 7. Seventh most hawkish. And then I guess Williams is the ninth. And finally, let's see. We have ISM manufacturing PMI. So that has some weight to it too. So that's all the big economic events for this week to look out for. So you're going to see a lot more volatility around Wednesday and Thursday, mostly. And I'm planning to probably hold on to my UVIXY positions heading into those days, just because I do expect a lot of volatility going around. Right now, we're seeing SPY coming up a little bit. Maybe possibly trying to fill the gap that it left overnight. So we had a pretty decent gap down in the futures market. If you look at /ES, this is Thinkorswim that I'm using, by the way. We gapped down from, it looks like 40.30, just below that 40.28.85 to 40.23. And usually SPY likes to fill the gap. So you might be able to take a bullish trade on that assumption. So if we go back to SPY, let me make sure the Discord is doing okay. I'll actually link the Discord for everybody to join so y'all can kind of participate in that too. And you can also comment in the chat if you're subscribed. But let me link the Discord for everybody first. If I can find it. Damn. All right. But hopefully y'all like this more kind of unfiltered version of me trading and giving my ideas around the market and everything. Let me know if y'all want me to keep doing these. If you find them useful, either leave a like or leave a comment in the chat. It'd be really appreciated. Let's see. I did not send that through. So right now we're trading at $400.58. The gap is all the way at 402. I'm not sure that we'll fill the gap today, just given what's going on over in China. So I would probably take a neutral or a bearish trade, assuming that we're not going to fill that gap until probably tomorrow. So the beauty of the new 5-day expiration dates, or 5 days a week expirations for SPY, is you can set your trade for any day of the week. So I'm actually probably going to do a bearish/neutral trade, which would be a call credit spread. So we'll see if that ends up working for us. And that one, I want to cut the expiration date to today just because of all the kind of chaos that's going on in the world. So I'm going to be making this trade over on this side. And if y'all want to see the trades, you can join the Discord. But let's see. SPY is the ticker. And this is going to be a call credit spread, which is a neutral to bearish strategy. So that's an important thing that you need to understand whenever you're trading options, is you need to figure out what sentiment you have for the stock. So my sentiment for this particular trade is bearish/neutral. And the way that I approach bearish neutral trades is call credit spreads. If I was bullish/neutral rating, then that would be a put credit spread. And then if I was just flat neutral, that would be an iron condor. If I was bullish on the trade, say if I did think that it was going to fill the gap, I would do a call debit spread. So I'd be completely bullish, assuming that it would be above the price that it's currently trading at. And then if I was bearish, I would do a put debit spread. I'm a very big fan of spreads because you have a defined risk reward. You know exactly how much money you're going to get out of the trade or how much your money you're going to lose if you're wrong. So that's why I really prefer spreads to really any other strategy. So I'm going to get this trade rolling. It's paying a decent credit. It's not, I don't know if it's really worth the risk that I'm taking on, but because there is a decent chance of it filling that gap, but we'll see by the end of the day. And I always like to use some stop losses by price levels instead of setting like hard stop losses. So I want to set an exit plan first. So I'll show y'all what price levels I'd be willing to exit at. I think the open of Friday would be a decent candle to start with. So 401 at 83. So let's see, that would be way up here, which was also a low of the day later on of the day at around 1 o'clock. So that's the first price level that I would want to exit at. I'm going to set a alert for that just in case it does end up crossing above. And right now we are pulling back from that morning high. There's probably going to be some resistance at these morning highs that we saw previously. Kind of hard to say what price level it would be. Probably around $400.80 if you want a nice round number. Markets really love nice round numbers, so we'll go by $400.80, and that might be our target entry, unless we do end up, pulling back. And a decent pullback would probably be the midpoint between the open and close of this huge first candle of the day. So I'll take the average of that, and that'll be a new price level that I set up. So that one starts at $399.09. Closed at $400.35. Oh, 400.35. You divide that by 2, and the average here is $399.72. So that's going to be a new price level. That's going to be like a downside target, I guess. So if I was bearish on the stock market today, that would probably be my go-to for a put debit spread. So I'd probably do, if I wanted to be safe, I would probably call it like a 400 put debit spread. Buy the 401, sell the 400. But today, my assumption is bearish/neutral, so it's going to be a credit spread for me today. And those credit spreads are already dropping in value since I'm taking my time on opening this trade, but that's okay. And for this trade, the way that I like to kind of open my trades is based on confidence. So if I'm more confident in a trade, I'm going to base it on how much money I want to make for the trade, which obviously isn't a good idea if you're holding into expiration, which is something that I'm trying to avoid these days. Hence why I have the $401.83 price level to exit out at. So if it hits that, then I'm out of the trade and I don't have to take my max loss. Because if you look at my beautiful spreadsheet that I have for the month of October, it was freaking rough. Super rough. But luckily I've, turned things around over the last couple of weeks at least to be making about $1,000 a month. But for the month of October specifically, I ended up losing $4,300, and the reason for this was because I allowed a bunch of options to expire, which lost me $8,500 versus the ones that I closed myself. I ended up making $4,200. So as long as I'm closing the options myself and not allowing them to expire, the chances of me making a profit are higher. So at least that's something that I've noticed in my trading. And if y'all want to check out the spreadsheet, also in the Discord and the Patreon. So anyway, going back to this trade, let's try to open it at a decent value. They are getting pretty cheap now. I don't know if I want to open them. But yeah, I think I want to make... I want to make probably $800 for this trade. That's the valuation. Basically, I'm giving this trade a valuation, how much money I want to make out of it. If I'm right, obviously, if I'm wrong, then I'll, lose however much money. But I think I'm willing to risk, or I'm willing to make about $800 for this. So we'll see. Right now, the prices are going up a little bit because SPY is recovering a tad. And then I'm going to set a price alert at the $399.72 level. So at or below that level, I won't exit, but that'll be kind of a confirmation that I was right. So it'll be like a soft alert where I'm not going to exit on it, but I am going to keep a closer eye on where the stock is trading. And that trade did end up going through. Thank God. Okay. So I'm going to post that in the trade alerts over on my Discord. If I can find the damn thing. New options alert. Premium. Okay. That one's expiring today, 11/28. So I really love the new 5-day expiration dates. Super useful, especially if you have like incoming data, like on a Tuesday or Thursday. This is kind of a game changer for that, which I really freaking love. But yeah, just open that trade and send through the trade alert. And my analysis for that again, China lockdown worries and civil Uprest seem to be causing more inflation fears. If China is locked down, that screws up our supply chains, basically, causing inflation to persist or go higher, potentially, just because of how reliant we are on, other countries. And globalization over the last 20, 30 years has kind of put us in a very sticky situation once COVID hit. And obviously China's kind of using their leverage in that, and also, kind of screwing over their people. But we won't get too political though with this. Anyway, SPY's coming down, currently trading at $400.16. Again, I'm looking at that $399.72 mark. And then I'm looking at that 401.83 mark. And another price level that I'll probably come up with is between the midpoint between the $400.80 and $401.83. So that's a difference of $1.03. So we can make this easy and say we could call it 401. God, math is sometimes hard. We'll call it 401.31. So that'll be a new price level to look out for, to consider. Like, it'll be kind of a soft alert again, kind of like the one that I have down here. But $400, 401.31 is my price level that I'm looking at. So later in the day, if I'm less confident in this trade than I was whenever I first opened it, then I'll consider closing it at $401.31 price level. But for right now, my price levels that I'm looking to exit is the 401.83, which I don't think that will hit today, but there's always a possibility of me being wrong. And you have to keep that in mind for your trading. Always be open-minded and accepting whenever you're wrong. But we've gotten through the first 20 minutes of the market, up from the open, which is good for the markets. I do want to make some earnings trades possibly after I made this SPY. So I have my earnings watch list that I posted on the Discord as well. Let's see. Where the hell is my earnings watch list? There we go. Okay, European Central Bank. So I'm looking through the news right now that came out this morning. European Central Bank President Lagarde says, I would not go so far to say that inflation has peaked. I agree with that sentiment. I think there's a lot of spending going on right now and not a lot of improvements in the supply chains. So kind of concerning there, but let's see. Well, I thought I had all three stocks on the watch list, but I have Ulta on the watch list. They're reporting earnings on Thursday. What other companies do I have? Let me pull up my watch list. So I had Ulta, Intuit, and Snow. So surprisingly, Ulta and Intuit are both up. Ulta is actually trading at all-time highs, which the reason why I chose Ulta right now, it's kind of a silly reasoning, but Ulta did really well in their last earnings report. And the thing about Ulta, is that they are kind of a staple. They sell hair products, they sell makeup, things like that people continuously need, even during a recession. So the way that I think about this is nobody wants to look ugly, even during a recession. If anything, you probably want to look even better to have like a sugar daddy or anything. But joking aside, if we look at the price levels, I'm looking at 450 price level. If we put up the yearly chart, I have the 441.58 price level from this gap down that they saw. The 434.53 price level from, looks like the midpoint between the open and close of this candle. So I really like to use either gap candles or I like to use midpoints. So between the midpoint between the open and the close, or the average between the open and closing prices of large candles. What I call them is candles of significance. So that one was a candle of significance because it was large, and it was also the start to a very steep downtrend. And then what else? We have the 430 price level from 6.9. You had a market close around that price, a couple market closes, and it opens around here. And then you have the 422 price level from this gap down previously. So my assumption for Ulta is that they're going to have a good earnings report. I think that their earnings is going to beat expectations just based on averages. So I take the average over the last 8 quarters. I compare that to what Wall Street expects by looking at earningswhispers.com, which if you go to a different earnings website, you're going to get different estimates, which is kind of annoying. But if you look at Earnings Whisper, the one that I like to use, they're coming in at 410 earnings per share is the consensus from Wall Street. So it's a pretty high earnings per share, and I think their average was around the same. So I think that given the amount of spending for this year, I think they're going to beat it on earnings. Their earnings is going to be on Thursday after hours, so we got a long way to wait for that. But again, the stock is already trading at all-time highs. Like, it's trading at 453 right now, which is a brand new all-time high. If you look at the 5-year chart, new all-time high. If you look at the max by quarterly chart, again, new all-time high. So I'm actually neutral given that it's trading at the all-time highs, given that I think that they are going to beat the earnings and probably beat the revenue as well. But it's really going to be focused on, like, what is their outlook. So what is their earnings expectations for next year? What is their earnings expectations for next quarter? Next quarter is probably going to have really good estimates just because it is going to be Q4, the fourth quarter, which generally has a lot of spending because of holiday season, probably people wanting to look good for the holidays and then gifting other people beauty, I guess. I don't, like, whenever I was young, my mom would always get me like Old Spice for my birthday, which I don't think you would get at Ulta, but same kind of concept. People buying each other presents, makeup, hair products, whatever. And they might go to Ulta for that. So they're probably going to have a good quarter. But given that they're all at all-time highs, I think people are going to be looking forward to next year's earnings if they give an estimate for next year's earnings. So that's one of the stocks I have on the watch list. I have Snowflake. So this is a data company. And so I actually have it written on here. Wall Street expects 4 cents. Their average was negative 65-cent earnings per share. Then Wall Street expects... Let me actually zoom in so we can see that more properly. Nice little feature about Thinkorswim is you can zoom in on the price levels too. So you can just do that to make it a little bit better looking. But 4-cent earnings per share is what Wall Street expects. And their average over the last 8 quarters since they started the company or went public has been negative 65 cents. So what are the odds of Snowflake beating that earnings per share? Now, I haven't dived deep into the financials and what they've been doing over the last quarter. So it is kind of a toss-up. Maybe they do end up beating, and if they do, that would be pretty great for the company. But statistics tell us that that's probably not going to freaking happen. And right now, they're trading at 143. Their low was 110. So I would be aiming to the downside on this, but given that I don't know enough about what they've been doing over the last quarter to possibly be profitable, I would probably play this bearish/neutral with a call credit spread. That's how I would do it. But then the last stock that I have on my watch list is Intuit. So the average earnings per share has been 112. The Wall Street estimate is 121. And then revenue is estimated to be 2.5 billion versus 2 billion average, right? So both of the estimates are above the average. Obviously, Intuit is a very tech-based, heavy growth kind of company, which kind of puts them in a sticky position since right now, we're raising interest rates, which is making borrowing capital and growing businesses a lot more expensive. So that kind of puts them in a bad situation. But, yeah, so that's Intuit. And I think given that they're probably going to miss on their SPY just crossed below that price level that I had set up earlier. But given that they are trading, given that both of the averages are below the estimate, I think they're going to miss on their earnings. I think they're going to miss on their revenue. But, the stock price and where they go after the earnings is really going to depend on the market sentiment. And kind of like I talked about earlier, there's a lot of events going on this week. We have a lot of big data dropping on Wednesday and Thursday, and I think their earnings, if I remember right, is on Tuesday, scheduled for 11/29, which is tomorrow, which is Tuesday. So I would probably want to hold that trade into Wednesday, Thursday to watch the market possibly sell off. But I would assume that this one would sell off pretty heavily. And the expected move from it is actually pretty decent. If you look at the trade tab over on Thinkorswim, let me actually make this full screen so it might be more watchable for y'all. That's anyway, I don't remember. There we go. Yeah, so the expected move is $26.70 basically. Currently trading at $3.93. So the expected move is 26.7 over 393.40, 6.7%. I think that Intuit is a little bit more popular of a stock to move more than 7%, given that they have a pretty bad earnings. And my assumption is that it would probably be below the first price level that I have set up, stemming from, not sure where I got that price level actually. Maybe this candle, no, the bottom of this, or the top of this gap. I think I missed the mark just slightly. It's supposed to be 384.82. And I drew it as 385.45. So let's edit that. 384.32, if I remember right, hopefully. Nope, my memory failed me. Low was at 384.82. 384.82, not 32. Numbers are hard sometimes. But yeah, my assumption is that would probably be below that, so I'm going to create an alert at or below that level. And this one obviously would be a bearish trade because I'm assuming that it's going to be a price below where it's currently trading. So that one, I would either, given that, the expected move is pretty low compared to what I expect, I think this could possibly fall all the way down to the second price level at 372, which would be a 22-point move. And the expected move is 26. Actually, I don't know if it'll move that much. And then my bottom price target that I have is 361.50, which would be a 30-point move, so slightly above what is expected at $26. So I don't know if the opportunity is there to go long on a put option, but I would probably take on like a put debit spread. And my assumption is that it would probably be at least below the 385 level. If they miss, obviously, I'm not going to always be right in my earnings assumption, but I do have, a decent gauge of where earnings is going to fall just based on averages. Mostly I like to use, statistics and logical reasoning, so hopefully my logic is correct on this, but I think I'm going to take that trade, given that the markets are pulling back right now, and Intuit is still up by 0.3% this morning. So I'm going to make that over on my Discord. And again, that one's going to be a put debit spread. And my expiration date, again, I don't want to hold the option into expiration. And I think the big move is going to happen either Wednesday or Thursday. So usually whenever the big move is Wednesday or Thursday, I like to extend the expiration date for next week. Again, trying to avoid that expiration. But given that their earnings is tomorrow, it's kind of hard to say what's going to weigh more. Is the market going to weigh more on Intuit stock, the overall market conditions, or is their earnings going to weigh more? I think that it's probably going to be a combination of both. So I would probably be more comfortable with the next week expiration. So December 9th, and then a put debit spread again. But yeah. And those are actually seemingly decently cheap. You gotta love bid-ask spreads on Robinhood. Oh, Jesus. The bid-ask on this is negative 30 cents. Like a bid at negative 30 cents makes 0 cents. That means that people are... I hate Robinhood sometimes. Hence why trying to switch to Aries, but Aries doesn't have combined spread options. So hopefully they implement that sooner, and then I'll probably move my money over there. But yeah, Intuit was my stock, so I got to go through the whole process over again. December 9th expiration. And Aries, let's see the quote they're giving me. Hopefully it's better. Hopefully this option just isn't super illiquid, which is possible. Given that it's next week's expiration, there's probably going to be less traders for next week's expiration since the earnings is this week. So that is something you kind of have to worry about, is liquidity, especially whenever it comes to spreads. But it's actually going for a decent price, so I'm going to take that up. So basically what I'm doing is I'm using Aries spread, and I'm applying that to what Robinhood should be quoting me for. Sometimes I'll have to drop either the bid or the ask a little bit to adjust, because they are different market makers, and different market makers are a little bit more manipulative, especially Robinhood's. But we won't get too deep into that. This one I'm less confident in. Usually for earnings, I have less confidence because it is a binary event. So whenever I'm less confident in a trade, I will base the trade size on how much money I'm willing to lose. And for this one, I would probably say, around $400, $500. That's what I would be comfortable with. Awesome. And I did end up getting filled on that, surprisingly, for a cheaper price than I put in. Thank you, Robinhood. Finally helping me out for once. Oh, that's the wrong place to put that. Yeah, copy and paste. Okay. So new trade alert. Put debit spread on Ulta or into it. I got Ulta on my mind. 3. Into. And that one expires next Friday. I think that's the 9th. And I got them at a decent price. Let's see. Yeah. So Ulta, so my reasoning for this, Ulta earnings tomorrow into it. Jesus Christ, I can't speak today. Sorry about that, everybody. Where the hell did I put that? Okay. Well, there we go. All right, sweet. Okay, so my reasoning for that into it spread, into earnings tomorrow after hours, expecting a miss on EPS and revenue based on average revenue and EPS the last 2 years at 112 and 2 billion versus Wall Street expectations at 121 and 2.5 billion. How the stock trades will depend on market conditions on Wednesday, Thursday during the high volatility events from economic data. But yeah, so that's the trades that I'm making today. I'll try to find some more, but I want to check in on SPY. I know that it came below the price level that I was wanting it below. Let's check out the spreads that I had opened. Hopefully they're at a decent profit given how much I risked. Yeah, so those, I was wanting to make 800. So far I'm up by 240 for it. So pretty decent trade so far. And I think the way that I like to exit my trades too whenever I'm doing spreads is I like to give like a ballpark estimate of what is the percent chance of this trade going for me or going against me. So I opened a call credit spread, and my assumption is that it wouldn't fill the gap, right? So I think that there's probably, I would put it between a 85 and a 90% chance that it isn't going to fill that gap. So I have like a mental note of what I think the chances are of this trade working out. So 85 to 90% chance that this option is going to work out. So I take 100, I subtract, that 85%. That means that I would want to close these spreads for a maximum of 15, and then my minimum for that would be 10 cents. Since I'm estimating a 85 to 90% chance of this trade working out. So 100 minus 90, I would either want to close these at 10 cents a piece if I can, ride them down to that level, or 15 cents a piece if I want to get out now. And right now they're going for 13 cents. So, yeah. Let's see if we can make any other decent trades for today. It looks like TLT and the bond markets are going up, with the dollar is probably what's leading that, with the whole China mess that's going on. I guess the dollar is actually pretty flat. I thought that it was up, but yeah, that one's not really moving. So UUP is the ticker for a derivative of the dollar, but the dollar nonetheless. And that one's flat for today, but TLT is up by 0.7%. So a good way that you can kind of get a feel for the bond market is looking at TNX, which is the 10-year Treasury yield. Currently, that is down from, I guess, Wednesday of last week. Did we have? I don't. Yeah, the bond market was open on Friday, so it is down from Friday, right? I do have a price level set at 36.59. But right now I have a TLT trade, assuming that TLT is going to be flat. And my assumption for that TLT trade is, yes, we do have global tensions, which is going to drop the yield on bonds, because whenever there's global tensions, war, what's going on in China, that makes people more fearful. And when people are more fearful, they're more willing to buy into bonds during that time, because it is a quote-unquote safer investment. So given that, that means that people are buying bonds, which sends the price up, and the price of a bond has a negative correlation, so the opposite, on the yield. So whenever the prices of bonds go up, so we can look at TLT, the price of the bond has gone up last couple of days. This is a 20-year Treasury bond, so it's not exactly the same. But the 10-year Treasury yield has come down over the last couple of days. So they have an inverse correlation with one another. And again, right now, people are buying bonds because they're fearful. So that's how you can use bonds. And usually the bonds have a negative correlation. The bond yields have a negative correlation with the stock market as well, because there's more perceived risk whenever yields are going up. Because the Fed is raising interest rates, which is creating more risk in the financial system, basically. So the yields are going to go up, and then people aren't going to start buying bonds until they feel like the yields have topped. And so far, it kind of seems like we have seen a top for the 10-year Treasury yield. If we look at the 1-year, 1-day chart, we topped at 4.3, but I don't know if that's the true top for the 10-year Treasury yield. My guess is that we'll probably go marginally higher. I do think that we got overextended during, I think it was September and October. I think that the market was extremely fearful of what the Fed was going to do, and we've seen, Fed members coming out and saying that we are currently worried about the risk that these higher rates are imposing, but the Fed is going to have to do it no matter what. That's kind of the issue that we've plagued ourselves with, printing, trillions of dollars over the last couple of years. Like, we added so much money into the system in the last couple of years, and now we have to fix the problem that we created, right? So something does, unfortunately, have to break. Something in the financial system has to break in order for, inflation to come down. You need a recession to get rid of inflation, because it's a cycle. So it starts with inflation, it moves to stagflation, which is where you have both inflation and the economy slowing down, and then that leads into a recession, and then it starts all over. So it's very cyclical, right? It's usually like a 4-year cycle where, the Fed ends up printing too much money. Now they got to pull it back, and they just revamp the system over and over and over again. Really freaking annoying, but that's the cards that were dealt. So can't really do much about it. Looks like SPY's coming back up to that 400 level. The spreads that I'm looking at are going for 16 a piece now. So I might consider closing. That one I made about a $240 profit. I wanted to make $800, but sometimes you just can't get what you want. So let's see. It looks like not really much support. I guess there was some support from the 399.55 level from the morning pre-market kind of highs during this time frame from 4:55 in the morning whenever I woke up, to 9:30. So maybe it catches a bid at that level at 399.50. So now is the time where I kind of reflect on, what price levels I want to go out at. So now that I've, made $200 so far this morning, I want to, at least keep some of those profits. So what I'm going to do is I'm going to move my price alert from this 401.83 price level to this 401.31 price level. So that's going to be my new exit plan, basically. That way, again, I'm not holding my options into expiration, because when you hold your options into expiration, at least for me, I end up taking max loss. So don't really want to lose money today. So not that I really get a choice, because the markets are the dealer and I'm just a poker player, but it is what it is. All right, fixed. But yeah, let's search for any other trades I can make today. With the TLT up this morning at 0.6%, I already have a lot of risk on that trade. I think I risked like 1,500, something crazy like that. But it was a long-term, like 3-week trade compared to my usual, day trade or 2-day trade, maybe 3-day swing trade. So we'll see on that. But let's see, into it. That trade's actually break even right now. Hasn't really moved much. It's actually come down to being negative on the day. I opened it when it was up by like 0.3%. So it should be profitable, but since their earnings is tomorrow, the price of it isn't really going to change until after the earnings and closer to the end of the expiration date. So whenever you're trading spread options, basically the idea behind a spread option is you want the stock to do what you expected to the greatest degree by as close to your expiration date as possible. So let me try to explain this in a more simple way. So I opened a put debit spread, and my assumption is that it would be below a certain strike price. So I want it to be as far below that strike price and for the option to be as close to the expiration date as possible. So let's say that I opened a put debit spread, assuming that it would be below $400. It's not the trade that I opened, but my the best way for that option to make a profit is for Intuit to be well below that $400 price target. So let's say that it's 15% below $400. That would be 400 times 85%. That would be $340. So if it was at $340, what is the likelihood of Intuit making its way back up to that $400 price target? Pretty freaking low, right? So that means that your spread option should have close to max value. And the closer you are to your expiration date, then the less likely that that option is, or the less likely that the stock is to recover. It's more likely that the option is, or the stock is going to recover in a time frame of 10 days than it is for the stock to recover in a time frame of 2 days. So hopefully that's helpful for y'all in trading spreads. Hopefully y'all gain a little bit of knowledge. If you do, please leave a like. Really appreciate it. But currently looking at the VIX, definitely heading up in the VIX trade that I have. It's up by 200. It was a long call that I bought, and whenever I'm buying long calls, I don't try to shoot for the stars. I only risked, 15 times $60 basically. I only risked 900 on this trade, and I'm up by 200. So I don't like holding just plain long options, because with long options, like just a regular call or a regular put, you have to deal with Vega, which is how much your options move for every 1% change in implied volatility. And then you also have to deal with theta, but if you're trading spread options, that kind of cancels it out since you're buying one option and selling a separate option. So you have a positive vega, then you have a negative vega, so they kind of cancel out, and then you have a negative theta, and then you have a positive theta, so they both cancel themselves out to some degree. But yeah, I'm out of that trade. Selling out of my VIX call, UVIXY call, I should say. And that one's a nice little $195 profit, so I'll take that any day. Again, I don't like to shoot for the stars. I'm not, a millionaire trader. I do have a decent sized account. My portfolio is like 70. But yeah. I posted that in the wrong chat again. God dang it. Alright. But yeah, I'm out of my UVIXY. I'm still holding some UVIXY shares for Wednesday, and then going forward, looking forward to the Fed meeting on the December 13th and December 14th. I think that's going to be a very volatile event that I'm preparing for. But let me type in this closing order. I think those were expiring this week, if I remember right. Where the hell are they? Oh, crapola. Where is the expiration date for this? 12/2. And 825 over 15, I ended up closing those at 55 each. Sweet. Yeah, so I'm out of that. It's a little bit relieving. Looks like SPY's coming back down to that price level that I had set up in the beginning of this live session. If y'all need to watch this back, you can. But below that 399.72 mark that I had come up with on this first opening candle, taking the average between the open and close of it. And let's see what those spreads that I traded are going for. Looks like my account's doing pretty hot today. It's a good day. So the spreads that I'm looking at are going for 13 cents, and I wanted to close them between 10 to 15, so decent chance to get out. I'm going to try to get them out at, oh shit, they just dropped to 10 cents. We'll see if I can actually close them at 11. Sometimes Robinhood will screw you up, and yep. God dang it, Robinhood. I really got to get out of Robinhood. I really want to actually switch to E-Trade. So apparently E-Trade has like some of the best fills that money can buy. You do pay a commission, a 65-cent commission per option that you open and close. So you get charged, $1.30 per option that you trade, basically, since you have to open and close the position. But you're going to end up saving money with that commission because, Robinhood right now, the bid ask on this is like 4 cents wide, or like 3 cents wide at least. Whereas on E-Trade, it's usually like 1 or 2 cents. It's very tight on E-Trade, so it makes getting out of your trade a lot easier, and you usually get better prices accordingly. So really that commission is getting you a better price, which ends up saving you money in the end. I'm going to be trying out a few different brokers, though. I've heard good things about E-Trade with their fills. Let's see. Let me type in this trade alert right quick. 402, 403. Nice. Nice little $300 profit on that. $200 from the UVIXY trade. So nice little $500 day. Again, I'm not some superstar that's making millions of dollars a day. Hopefully a little bit more relatable to y'all. But yeah, that's probably it from me today. All the trades that I'll be making. Looks like the chat was empty. So if y'all could leave some comments in the chat next time. You'll have to subscribe to the channel. And leave a like before you leave. And I will catch y'all tomorrow at the same time. and 9:30 in the morning. See you, everybody.